We'll start with yesterday's 4 hours. It is perceived that we had finished actually a 1 and a 2, 3, 4 and a 5. That 3 drops back here, that 4 is here. We're just maybe seeing the last leg in 5 in yellow, and then we get a reversal. Reversal should take us to shoulder levels. We're looking ahead, double shoulders to the right. We perceive double shoulders to the left. But again, of course, we need the trigger to take the move. 124 is very close to the level that we are right now, 124.30. This is what we're looking at yesterday. So it was perceived that maybe the market has finished 5, but it was showing here a 3. We get a 4, we get another 5. If it had finished 5, it would be a 1 and a 2 and reversal high. So it apparently have done 5. We're still waiting for that reversal high. We only go on a trigger. In this kind of setup, this is of course a wedge. You want to sell positive momentum and buy negative momentum, but it would be a bit risky to buy at current levels, given that the higher degree frames are really negative. All right, so let's take it to check positive momentum first. We have cyclic streams. Bear with us a second. All right, we can clearly in a way see the last leg 5. It's like a 1 and a 2, 3, 4 and a 5. It's a wedge, and of course because it's a wedge, leg 4 can transcend level 1. But I believe the last leg that we had must have been a 5. We are seeing this 3, 4 and 5. There's a 1 and a 2, 3, 4 and a 5. So we should be bouncing. We're seeing an inverted head and shoulders. We go on a trigger. We're seeing now very dilute negative momentum on the 45 minutes. Let's take it to a higher degree. Also very dilute on the 1 hour. With the cycle extreme already finished, negative cycle extreme finished. I believe it's also dilute on the 2 hours, on the 4 hours. Not really, still trending on the 4 hours, and I believe on the day. We have it a neckline, of course, presumably about to bounce, at least intermediate term to do a shoulder. Let's take it back to 15. So we just need to wait for a trigger on the 5 and 15, take it to the neckline. We don't yet have any on the 5 and 15, but we can tell we are quite close. It's quite a lucrative move, especially going into NFP. Especially going into NFP, it could be quite a bet because maybe we get a strong employment number and sterling will not appreciate against the dollar. But assuming everybody perceives softness in employment, then we are going to rise suddenly and hit the neckline. It becomes a 1 and it will usually even break a bit higher than the neckline before we fall back to support and form shoulders. So the trigger that we take, assuming we're able to get in, right now market is 123.60. By the time we have a trigger on the 5 and 15 minutes, it's probably going to be above a level 1, 124.30, will actually take us to 126, at least, if not 126.30. So it's a very, very lucrative trade. From 124.30 to 126 is 170 points. There is the momentum to take us there, assuming we have a weaker employment number. All right, so we buy market on a trigger, or we take an entry on a trigger, 5 and 15 minutes, positive momentum, or 5 and 3 minutes, positive momentum. Best, of course, if you have taken out level 1. This is level 1 here. This is internal level 3, I believe, or internal level 1 at that point. And, but this being a wedge, this level counts very much where you have that yellow arrow. So we take this level out. We are at 124.20, for instance. We should be seeing triggers on the 5 and 3 at least, if not 5 and 15. We take the long. We have a hedge just below the market bottom, and we can hold it going into NFP all the way to 1.26, maybe even 1.2620 can also be possible.